Welcome back to Investing Talk podcast. Today we're zeroing in on a company that's, well, it's been making a lot of headlines, not just in tech, but really across the whole economic landscape. We're talking about Intel. And the big question, the one everyone seems to be asking is Intel a good time to buy right now? We're going to look at this from all angles: financials, strategy, what the future might hold. And hey, if you find this kind of analysis valuable, please do remember to subscribe, like, and maybe drop a comment. We love hearing from you. Also, if there's another company you'd like us to look into, let us know in the comments below. Okay, so let's get into it. We've gathered a stack of recent sources, analyst reports, news, market data, trying to piece together the full picture for you. Because this isn't just about the numbers, is it? It's about the story behind them.
Exactly. And what's so interesting here is that Intel is really at this critical point, wouldn't you say, a real crossroads. Our goal today is to take all that information you've gathered and synthesize it, give you some clear insight into what's driving Intel's current situation and, where it might be headed.
Right. Let's start with the foundation, the hard numbers. Our sources seem to paint a picture of a company facing some, let's say, real challenges in fiscal 2024. What are the key takeaways from their revenue and earnings? What's the story there?
Well, the headline figures for FY 2024 definitely jump out. Net revenue was $54.2 billion. It's a pretty notable drop, 14% year over year from $63.1 billion in FY 2023.
14%, that's not small.
No, it's not. And our sources suggest this isn't just, the wider economy. It's really down to competitive pressure. Think AMD, TSMC.
Wow.
They're feeling the heat in both client computing and the data center segments big time. And then you look at the bottom line, a net loss of $3.1 billion, actually slightly wider than the $2.8 billion loss they posted in 2023.
Widening losses, okay.
Yeah, and the operating margin was negative, largely because of increased R&D spending, which is crucial but expensive, plus significant restructuring costs. And they're still pouring money into expanding manufacturing. So it all adds up. Diluted EPS for FY 2024 ended up at negative $0.76.
Not the kind of numbers you expect from Intel historically.
Definitely not.
Okay, so that income statement sounds pretty challenged, but what about the bigger picture? The balance sheet, debt, cash flow? How's the underlying financial health looking?
That's a really important question. Because while the P&L looks rough, the balance sheet tells another story. Total debt did increase, up to $48.1 billion by the end of 2024.
Up from about $41.8 billion.
Exactly. And that jump really reflects those huge investments in new manufacturing facilities. They're betting big. Now, they did have $19.2 billion in cash and short-term investments, which is a decent cushion, but net cash from operations was down, dropped to $11.2 billion from $15.4 billion. You can see the margin pressure there.
And the free cash flow.
Yeah, that's the key number here, I think. Negative $7.1 billion for FY 2024.
Oof. Negative free cash flow, meaning they're spending more than they're bringing in from operations, even after investments.
Precisely. It shows the sheer scale of the investment phase they're in right now. Heavy, heavy spending.
Which brings us to something really interesting, especially given those numbers. The government support. How does that factor into all this? It seems quite significant.
It's hugely significant, and it addresses that exact point. How do you fund these massive investments when you're losing money? The big news is that $8.9 billion equity investment from the U.S. government, and that builds on a previous $2.2 billion.
So over $11 billion in total now.
Yeah, a substantial injection of liquidity. But it's more than just cash. It's a massive signal of confidence, right? Shows how important Intel is seen from a national strategic perspective. So while the net debt is higher, it's generally considered manageable, especially with this kind of backing.
And it wasn't just a grant, it was an equity stake.
Correct. The government took a 9.9% stake, placed at $20.47 per share. So their interests are aligned with other shareholders. It effectively puts a bit of a floor under that investment, strategically speaking.
Interesting. Okay, so financially challenged, but strategically vital, with significant government backing. How does that translate to their competitive position in the semiconductor world? They used to dominate.
They're still unique, still absolutely vital. They are the main U.S.-based player doing advanced logic and foundry work at scale. That makes them a national security asset, frankly. Or unrivaled domestic production capability.
But the competition.
Oh, the competition is fierce, no question. TSMC, AMD, they're facing intense pressure, especially on those leading-edge process nodes, the really tiny, powerful stuff. And in the data center CPU market, Intel's whole turnaround really hangs on, successfully ramping up these new manufacturing processes and growing that foundry business. Making chips for other companies. That's the big bet.
It really does sound like a make-or-break moment. Have there been other big strategic moves recently, partnerships, things like that could shift the odds?
Absolutely. The last few months have been incredibly busy on that front. Your sources point to several key things. First, that landmark deal in September 2025, a $5 billion investment from NVIDIA.
From NVIDIA?
Wow. Yeah, and a strategic partnership. They're planning to deliver custom CPUs for data centers, integrated chips for PCs, really targeting AI and accelerated computing. That's a huge validation from a leader in that space.
Okay, that's big. What else?
Well, there was that $8.9 billion U.S. government investment we mentioned back in August 2025. That's the CHEPS Act money really coming through, aimed at boosting U.S. semiconductor resilience.
Right, bringing manufacturing back on shore.
Exactly. And SoftBank also chipped in $2 billion, aimed at semiconductor innovation and AI. Plus, on the customer side, AWS launched new cloud instances using Intel's Xeon 6 processors. So there's still a major player in the cloud.
Seems like a flurry of activity trying to shore things up and push forward. What about internally? I remember hearing about them streamlining, focusing their efforts.
Yes, that's another key piece. They finalized the sale of a majority stake in Altera, their programmable chip business. That happened mid-September 2025.
How much did that bring in?
About $3.3 billion. So it strengthens the cash position, obviously, but just as importantly, it sharpens their focus. They're really betting everything on the core foundry and manufacturing plan. It also helps lower their projected operating expenses for 2025.
Makes sense. Cutting non-core assets.
Precisely. And on the product side, their new Core Ultra 3 processor got some strong early reviews, outperforming previous generations, which is a good sign they can still innovate in that mainstream computing space.
That's positive. But I also recall some less positive news. Workforce reductions earlier in the year.
Indeed. That was back in July 2025. Their Q2 earnings missed expectations on adjusted EPS, and that triggered a pretty steep 15% workforce reduction.
15%? Wow. That must have put a lot of pressure on morale and strategy.
Absolutely. It intensified scrutiny on their whole approach, cost management especially, and tied into that, there have been these ongoing rumors, discussions, about potentially splitting the company, separating the chip design side from the manufacturing side.
Really? To unlock value, presumably.
That's the theory. Streamline operations, maybe get higher margins for the design business. Nothing formal announced, but it's definitely being talked about. A major potential shakeup.
Okay, quite a complex picture operationally and strategically. Let's shift to the stock itself. How has Intel's share price actually been behaving recently? What are the technicals telling us?
Well, looking at the last 3 months or so, the stock's been trading in a range, roughly between $21.30 and $28.80. The last price reported was $21.61 as of early September 2025.
And you mentioned that government investment price.
Right, $20.47. So you see key support identified around that $21, $22 level, which lines up pretty closely with where the government bought in. That seems to be acting as a psychological floor, maybe a real one.
And resistance. Where's the ceiling been?
Resistance looks to be around the $27 to $29 mark. Those were highs seen back in July and August. If you look at moving averages, the short-term 20-day SMA is ticking up slightly, but the longer-term 50-day and 200-day are pretty flat. Suggests it's consolidating, moving sideways mostly.
And momentum. Overbought. Oversold.
The RSI, the Relative Strength Index, is hovering right around the midpoint, 48 to 52, so neutral momentum, not indicating it's extremely stretched either way. One interesting point, though. Implied volatility is quite high compared to other semiconductor stocks. That reflects the uncertainty around these pending deals, the government stake. It suggests the market expects potentially large price swings to continue.
Okay, so a stock in consolidation, but with potential for volatility. Given all that context, what should investors be watching for? What are the key potential catalysts, short-term and long-term?
Definitely some key things on the horizon. Short-term, all eyes are on the Q3 2025 earnings report. That's expected the week of October 21st.
What will people be looking for there?
They'll want to see how those recent partnerships, the restructuring, the cost cuts, how that's actually impacting revenue, especially in the foundry and data center areas. We should also see the immediate impact of the cash from the Altera sale. And critically, any announcements about new external foundry customers, that would be a huge proof point for their strategy. Could definitely move the stock.
And looking further out, long-term.
Long-term, it's all about execution on that manufacturing roadmap. The government support, the capital raises, it's all aimed at building out domestic foundry capacity and mastering those advanced process nodes. That's a multi-year play, 2 to 4 years, maybe more. Success there, plus strategic wins in AI chips, could drive real growth. And you can't ignore the geopolitical angle. The push for domestic manufacturing is a strong tailwind for Intel.
You mentioned rumors earlier, too. Anything specific swirling around that could act as a catalyst if it pans out?
Yeah, the rumor mill keeps churning. That potential split between design and manufacturing is a big one. A formal announcement would be major news.
Who else?
There's chatter about more AI or cloud partnerships, maybe building on that NVIDIA deal. Could they partner with other hyperscalers or AI players? Possibly.
Yeah.
Also rumors about potentially landing more big U.S. government contracts beyond the TPS onding. That would further cement their position.
And any talk about leadership?
Yes. There's always background noise in financial circles about potential executive changes or board restructuring, especially during a turnaround. Anything there could certainly impact how the market views their execution plan.
Okay, so lots of moving parts, potential catalysts, and rumors. What about the flip side? For someone considering an investment, what are the biggest risks they need to have front of mind?
The absolute #1 risk, I'd say, is execution risk. Plain and simple. Intel's entire future basically depends on hitting their targets for deploying these next-gen manufacturing nodes on time and successfully. Any major delays or problems there, it could be catastrophic for their competitiveness.
So can they actually deliver on the tech promises?
That's the multi-billion-dollar question. There's also risk around customer concentration, relying too heavily on a few big clients, and the potential for margins to stay squeezed because of all this heavy spending on CapEx and R&D during the turnaround. It's expensive.
And beyond Intel itself, market risks.
Definitely. Geopolitical uncertainty is always a factor in semiconductors. Things like export controls, trade tensions. They can disrupt supply chains fast. The semiconductor market itself is notoriously cyclical. Demand goes up and down. And as we discussed, the competition from TSMC and AMD isn't going away. There's a constant risk of losing more market share if Intel falters.
This has been incredibly helpful, really laying out the different facets. So let's try to bring it all together. What's the overall investment thesis here? For you, the listener, thinking about Intel, is it a good time to buy now?
Okay, connecting all the dots. Intel is this strategically vital company, no doubt about it, but it's also in the middle of a very challenging, very complex turnaround. That huge government investment, plus the CHEPS Act support, gives them crucial breathing room on the balance sheet, and it validates their importance on a national level. It's a huge safety net, in a way.
But the current financials.
But the current financials are still weak. Net losses, negative free cash flow, all while spending massively and fighting intense competition. It's a tough spot operationally. Taking all our sources together, the overall rating seems to land somewhere around the 6 out of 10. That reflects the potential, but also the significant risks and the current underperformance. Cautious optimism, maybe.
A 6 out of 10? Okay.
You've got fairly clear downside protection around that low $20 mark, largely thanks to that government entry price providing a sort of anchor. But significant upside really depends on them executing flawlessly and getting back to sustained profitability. Without that, the upside feels capped.
So what's the conclusion then? Buy, sell, hold, short-term, long-term?
I think the consensus points towards viewing Intel primarily as a long-term investment. The short-term picture is just too messy, too volatile, with too many execution hurdles and range-bound trading. But for a long-term investor who wants exposure to the rebuilding of U.S. semiconductor manufacturing, who believes in the turnaround potential, and who values that government backing, Intel offers an interesting asymmetric risk-reward profile.
Asymmetric meaning?
Meaning the potential upside, if they succeed over the next few years, could be considerably larger than the potential downside, especially given that perceived floor near $20. And it's a big, but it absolutely requires patience. You have to be willing to tolerate near-term volatility, potentially more bad news, and maybe periods where the stock underperforms. It's a bet on the long game.
That's a fantastic summary, a really comprehensive look at Intel, laying out the complexities, the massive stakes involved, and the potential rewards down the line. A true giant at a crossroads.
And it leaves you, the listener, with a really critical question to think about. How does Intel successfully balance being this crucial national asset, almost a utility in some ways, with the hard-nosed demands of profitable execution in one of the most competitive global markets on Earth?
That is a great thought to chew on. How do you walk that tightrope? Thank you so much for joining us for this discussion on Intel. We really hope you feel better equipped to think critically about this major tech player. And please don't forget to subscribe, like the video, and leave us a comment. Tell us what you think or suggest another company you'd like us to analyze. We'll be back soon with another look into your sources.